Jerome Powell, the chairman of the Fed, announces an imminent interest rate cut after winning the first round against inflation. What can we expect after the breakout of Bitcoin's wedge? Is this event perhaps a prelude to a continued bearish trend in crypto, or are we instead in key buying zones?
During his participation at the Economic Club of Washington, D.C., Jerome Powell, chairman of the Federal Reserve, made statements that have generated optimism in financial markets. Powell stated that interest rate cuts are virtually assured in the near future, which has been interpreted as a positive signal, bolstering bullish sentiment in the cryptocurrency market and other risk assets. These statements come just 2 weeks before the next Federal Open Market Committee (FOMC) meeting, where decisions on interest rates will be made. The last time the Fed raised its interest rates was in July 2023, marking the culmination of a series of increases aimed at combating inflation, which had reached levels not seen in decades. Since March 2022, the Fed increased rates 10 consecutive times, raising them a total of 5 percentage points from nearly zero to a range of 5% to 5.25%. This cycle of increases was a direct response to rising inflation, which peaked at 9.1% in June 2022. However, inflation has shown signs of slowing in recent months. In June 2024, the Consumer Price Index, CPI, marked a 3% year-over-year increase, indicating a downward trend. Powell noted that monetary policy decisions are based on data that, although delayed, reflect an economy where the decline in prices is more pronounced than current reports indicate. Powell's statement suggests that the Fed will not wait for inflation to reach its 2% target before starting to cut interest rates. This stance could have a significant impact on financial markets. A rate cut implies cheaper credit, which stimulates business production and consequently drives economic growth. This translates to a more favorable macroeconomic environment for risk investors. Jerome Powell's statements in Washington, D.C. represent a significant shift in the Federal Reserve's monetary policy, although Powell did not offer specific dates or magnitudes for potential rate cuts.
Now, let's talk about the importance of this event, in which Bitcoin worked a market trap to then begin the recovery we were all waiting for. Following up on that analysis, we see that after this bearish impulse that was everything but sincere, it has been working on a complex corrective pattern. And now we find ourselves facing a Z. The Z has been worked into a wedge format, making it smaller and smaller until it can't be reduced any further, and then breaking it. Now, let's talk about the importance of this event since the cards are already on the table. But before that, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Before we dive into Bitcoin, it's crucial to understand Ethereum and other altcoins. Remember that in Ethereum, we have been working on a distribution process defending all its sales with a supply line. Look at what's happening right now. The price has collapsed against a structure that is truly key. While Ethereum itself, perhaps in a very obvious way, doesn't show us the corrective pattern concerning the bearish impulse as Bitcoin does, we are essentially working on a complex corrective pattern here as well, which has also been formed into a wedge and impacted against a key structure. The wedge break in Ethereum has impacted the Z macro structure, and after this impulse, it's normal to find ourselves in at least a corrective phase. Let's be clear, it's very unwise to try to turn around a Z, because that's what everyone would want to do. Identify the perfect point to turn the market around. But remember, Zs by their nature can extend as much as they want, and frankly, we don't know when. But sooner or later, we are waiting and speculating on the break of this Ethereum structure. In other words, we believe that sooner or later, the institutions that started distributing in early June have already made sufficient profit, and now we are in another cycle. And hey, we talked on July 4th, saying we were at this point in an ideal context for looking for long-term purchases. Everything is recorded. That said, we are in a Z that we don't want to turn around. Therefore, if the Z directive survives and holds, let them try to break it. But if they can't, we are going to bet on this break, looking for a black swan that projects us upwards. That's what we would be waiting for. Of course, it will be crucial to respect the Z directive, as losing it wouldn't be the end of the world either. Think of the following. Eventually, which no one knows, smart money decides to break the Z directive and it's confirmed, we would simply be looking for a correction of this bullish impulse that needs a pause to gain strength and then break and generate that black swan we are waiting for in Ethereum. In the end, the summary of this Ethereum analysis is that we are positive. We are betting on the break of this structure, simply proposing two hypotheses regarding regarding the time factor. First, if the price respects the Z's directive, it means the time factor will be short and we will soon head upwards. However, if the Z directive is pierced, it means we will go for a Z in reference to this bullish impulse, and we don't know how far it will go before breaking. Notice that we have this clear priority, and this will become much clearer with what we are seeing on the Ethereum chart. We will also explain what we see on the Solana chart and how everything is super clear, just like in Polkadot, an open book. Remember that we will soon launch our private Telegram channel for our English-speaking community, where we will conduct live technical analysis daily, looking for trading opportunities. This channel will be available very, very soon. To access this private channel, which is already a great success within our Spanish-speaking community, one of the requirements will be to be a user of Bitunix with our referral code. This exchange is accessible from anywhere in the world without a VPN, including the United States, and KYC is not required. Its trading panel is highly competitive and comprehensive, and the assets and market liquidity on this exchange are exactly what we all seek. So get ahead of the game for when we open slots for our private Telegram channel for our English community. Open an account with Bitunix now. We will leave the referral link in the description and pinned comment of this video. Also, keep in mind that until July 31st, for the entire Crypto Insight community, a deposit of $100 and trading equal to or greater than 3,000 UST, which I can tell you is very easy to reach, will get you a $100 futures trading bonus. I invite you to open an account with Bitunix today so that tomorrow, when we open access to our private Crypto Insight Telegram community, you can join from day one. Remember, find our referral link to Bitunix in the description and pinned comment of this video. And before we move on to Bitcoin, let's talk about altcoins like Cardano. On this 1 hour time frame, remember that we are dramatically seeking the origin of the macro breakout. I have explained this in previous videos, and now we have recently pierced the creek, as you can observe. Now, pay close attention to the breakout as it broke without looking for any kind of test or confirmation. Notice how it's leaving us with some gaps here. Therefore, it makes some sense. We'll see how, but as long as the Z directive of Bitcoin and Ethereum holds, or even breaks and the price goes down, we can then expect declines in Cardano. Whether it's about the creek or trying to create some sort of trap, the narrative will always be to seek the replica of this impulse to reach the 0.5 level in Cardano. And it will be crucial to know if Ethereum will hold that Z directive it's holding now. If it holds and doesn't break it, it would mean that all cryptos would enjoy a strong bullish run almost immediately. This would imply that Cardano wouldn't need much correction and could soon take off. The same goes for Ethereum. We are positive without any doubts. We are just questioning whether we will correct first or not, and Ethereum's ZOW directive will tell us this in a very simple way. And moving forward, Bitcoin also has its Z directive. It's very important to talk about Solana because we've been working on a really key structure which has recently broken a creek. Here, we assume that this is all part of an accumulation process. Recently, we've broken its creek, and like with Cardano, if you ask us here, we are missing the test. So it would be plausible if Ethereum and Bitcoin's Z directive collapses to seek a correction to do the test. Who knows? Maybe to seek some liquidity as a trap, and then look for that replica that takes us at least to institutional target number 1. This indicates an upward accumulation process, but pay close attention to the structure of Bitcoin and Ethereum, because if the Z directive does not collapse, the bullish party will simply continue sooner rather than later. I hope it's clear that we are unidirectional. We only have one upward direction. We will track this in a very specific structure in Bitcoin and Ethereum, which will tell us whether we will correct before taking this direction or not. No more information can be given. And as promised on this 4-hour chart for Bitcoin, look at how much importance we place on the price recovery over that structure, which we can now label as a trap, and this strong impulse takes center stage. Moving to the 1-hour chart, we had already been talking about this upward impulse. Here, we have a correction, and all this forms a Z. This gives us all the information in the world. We see that Bitcoin's wedge has collapsed. After this collapse, they will always seek the Z directive, which they have already done. And after this strong downward impulse, it's normal to have this correction. So, look how, from an apparently pseudo-random chart, it's possible to understand what the heck is happening in an asset's price as long as Bitcoin supports this level, the price level of $64,100. We can say that if this level holds, we can expect a strong and powerful bullish continuation. And in the case of losing the same, according to the analysis we've already done, of course, it makes sense that after a tremendous bullish impulse, if the Z directive is lost, a correction would be something tremendously natural. It wouldn't be the end of the world. It could be an attempt to test the macro defense zone, something very typical before taking off. And as I said, it wouldn't be the end of the world. Clearly, this drop might be a bit exaggerated, but frankly, we will follow the market to see how far they might take this movement if the institutions plan the future of Bitcoin that way. Pay close attention to what happens in that structure, because it will be your signal to know whether we are positive or negative in the long and short term when the price interacts with it. If you like this advanced technical analysis, let me know in the comments. Also, give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future posts. And don't forget to share this content with your friends and other trading and cryptocurrency communities who I'm sure will greatly appreciate it. Let's combine our strength and see you next time. Subscribe! Don't forget, subscribe to the channel.